Welcome to Gambling with an Edge with your hosts Bob Dancer and Richard Munchkin. Bob Dancer is America's premier video poker writer and teacher. He's written 10 books, including Video Poker for the Intelligent Beginner and the best-selling $1 Million Video Poker. He helped develop the computer software Video Poker for Winners, and in 2004 he was inducted into the Video Poker Hall of Fame. Richard Munchkin has been a professional advantage player for over 30 years and is in the Blackjack Hall of Fame. His book, Gambling Wizards, Conversations with the World's Greatest Gamblers, is a testament to the many ways you can succeed at gambling. The goal of the show is that you'll be a more knowledgeable gambler tomorrow than you were yesterday. And now, here are Bob and Richard.
Good evening. Welcome to Gambling with an Edge. I'm Bob Dancer.
And I'm Richard Munchkin.
Our guest tonight is option trader Brian McAllister, who's been on the show before talking about some of his gambling exploits. Tonight, Brian is going to be discussing the parallels between option trading and successful gambling. We'll be talking to Brian in a few minutes. On last week's show, we were talking about poker stars, and we mentioned that they got out of the American market as soon as the UIGEA was passed. We got a couple of emails addressed to gamblingwithanedge@gmail.com that said this wasn't true. In fact, poker stars stayed in, they still dealt to Americans until Black Friday, when the Justice Department cracked down on Full Tilt Poker, Poker Stars, and other sites. We regret our misstatement. Our next story is about sharking, a term I had not heard until this week. A Finnish high-stakes poker player, Jens Kolonen, and I've never heard his name pronounced, and I might be unintentionally butchering it, and if so, I'm sorry. But Jens Kolonen was playing in a tournament in Barcelona, and his laptop was stolen and then returned. He suspected his computer security had been compromised, and then he had it checked out. Sure enough, a RAT, which stands for Remote Access Trojan, had been installed, possibly via a USB drive. This allowed some other person to see everything that was on his screen. If he was using his computer while playing online poker, someone else could see his whole cards and greatly profit by knowing when Kolonen was bluffing and when he had the goods. Doing this to a poker player is called sharking. Kolonen isn't the first player to report such sharking. If players take their computers with them on the road, they should be taking much stronger security precautions than they currently are taking. Back in the good old days, Richard, you played a lot of online poker. Have you ever been sharked?
No, I haven't. And I never played online poker for any kind of serious stakes. I would be really, this is, as you mentioned, not the first case of this. There's more and more of it going on, and cheating at all games is getting a lot more high tech. So, no, it never happened to me. And I would be really careful about encrypting my computer if I was, even in my home, because it wouldn't surprise me if people have, had their homes broken into so that this kind of thing could happen. And you have to have all the same precautions, that anyone does to avoid a virus, not clicking on attachments in emails or links in emails from, unless you're 100% sure of the people who sent it to you.
Very good. All right. There was a story this week about a poker player who inadvertently left $300,000 behind in a Las Vegas taxi cab. The money was returned intact, prompting the taxi driver to get a $10,000 bonus from the taxi company and some unknown amount of reward from the poker player who as yet hasn't been identified. It's good to hear about this, and it's also fun to play with this one in your mind, including start with what kind of inebriated or absent-minded idiot would leave $300,000 in a taxi cab, or maybe each of us could ask ourselves, if I were the one who found it, would I be 100% honest about returning it, or just borrow a couple of the $100 bills or something? Or would you think, man, that was some lucky dude? Well, now, Richard, I didn't know that you were in Las Vegas this week, but were you that poker player?
No, it wasn't me, but yeah, it's interesting, and I'm sure eventually it'll come out who it belonged to. Are you sure that $10,000 came from the cab company? That's surprising to me that didn't come from the poker player, because I'm sure the cab company wants to encourage their drivers to be honest, but
the story I read was on cardplayer.com, and that's how I read the story. So
we a former teammate of mine one time left, I think it was $30,000 in the back of a cab, and when they, when tried to find it, the cab driver said, "No, I never saw it. I don't know what happened to it." And the team eventually hired a private detective. And the private detective did end up finding the money buried in the backyard of the cab driver's house. So,
how do you need a warrant to dig up backyard of somebody's house? I would think.
No, I don't know if the detective caught the guy digging it back up, or how exactly the detective found it. But that is where it was.
Interesting. All right. Now, I regularly check richardmunchkin.com.
Well, that's a good idea.
It is a good idea. Over the past week, Richard, you posted something about trusting your partner or not trusting your partner. What was that post all about?
Well, I got an email from a listener who said that his partner had gone to scout a game, and the limit on the game, the minimum on the game was only $5, and his partner had lost $220 scouting, this game, and he thought that was an outrageous amount of money for his partner to lose. And he can scout a game in one or two hands and know if the dealer is any good or not. It was a hole card game, and so my post was about a couple of things. One, yes, you can lose $220 scouting a game, especially if it's a game where, your initial bet is $5, but you can often end up with 10 times that amount bet on the hand before the hand's over. And it often takes many more hands than one or two to really determine, if a dealer is good or not. But the most important issue was, do you trust your partner? That's a very serious thing. Either you trust your partner or you don't. And if you don't, then you really have to ask yourself, should this person be my partner? And there are two issues. One, do you trust his honesty? And the other is, do you trust his judgment? Because, that could be the other issue that at stake there. So anyway, that's really what the post was about.
One of the things you said in that post was that everybody has their own way of dealing with money.
Yeah, boy, that is so true.
And on an earlier show, I believe it was on the show, it could have been after the show somewhere, you said somebody once taught you that you can trust different people different ways. Like some guys you can trust with your money and your booze, but not your wife. But other guys you can trust with your wife and your booze, but not your money. And
yeah.
So
that's a separate issue. But this thing about people being peculiar about money in their own way, everybody has things that they don't mind spending money on, and stuff that they would not spend money on. But everybody is different. You know what I mean? So you can't impose your choices, especially in a marriage. Man, if you have those kind of arguments with your wife, I wouldn't think it would last long. But the same is true of your partner. You need to agree on those kind of things. But some people think I'm crazy because I might spend $600 on show tickets to go see, a show like Wicked or something. Whereas you probably spend money on, I don't know, something that I would never spend it on. So,
well, I do spend more on square dancing than you. I'm quite sure of that.
Yeah, right.
I'm quite sure of that. Now,
I'll tell you another thing. I could never spend $100 on a tie. I just couldn't do it. So
you like size 12.50 ties, $12.50 ties. Well, good. Actually, I'm going through that. I'm engaged to be married, and so next May or something, the date is going to happen. And Bonnie and I are kind of working out how much is reasonable to spend on this and how much is not, and we're finding out we're in agreement more often than not. But every now and then something comes up.
Yeah.
Anyway, let's talk to our guest. Brian McAllister has worked in the options industry for 19 years. He's traded for several firms. He's also a software programmer who's written many of the algorithms used by market makers in exchanges in the United States and Europe. Brian McAllister, welcome to Gambling with an Edge.
Hi, thank you.
Tonight we're exploring the relationship between trading options and gambling. So, to start with, what is an option and why do option markets exist?
Okay, so I do want to keep this kind of simple, I guess, because options can get kind of complicated. They fall under a class of securities called derivatives, and basically you have things that sort of represent something tangible. So even stock represents something tangible. It represents ownership in a company. Well, options and futures and some of these other more exotic derivatives are basically ways to bet on the prices of other sorts of instruments. And the way that options work, basically, when you purchase, say, a call option, you're buying the right to buy a certain amount of stock for a certain price before a certain time. And so instead of, for instance, if I wanted to buy 10,000 shares of IBM, that might be a very expensive thing to do. Instead, I could buy 100 calls on IBM and basically experience the same sort of upside as when IBM would go up, but with a much lower cash investment. So in a lot of ways, it provides a lot of leverage. There's also ways of providing insurance. Analogous option to a call is a put, which is the right to sell stock. So if I own some amount of stock, I can buy puts as a protection against that, which basically guarantees that I could sell it at a certain price, even if the stock were to drop lower than that. So that's kind of like
but you can buy a put even if you don't own the stock, right?
Yes. You can certainly bet on stock going down. One way to do that is to short stock, which actually requires you to borrow the stock from somewhere, and that's a little bit more complicated. I guess we can get into that a little bit later. But another way to bet on the price of the stock going down is to buy a put. And then, of course, for everybody who is buying an option, there's someone else who's selling an option. It's a contract between two people. Again, there's very little difference between that and just an actual bet. It's just that it's been securitized and it's got the blessing of the SEC and the U.S. government, and so it's a lot of people basically gambling legally. And I know this is kind of a controversial topic, but certainly not for this show.
Well, if I have a position that I will sell somebody 1,000 shares of IBM. If they decide to pick up that option, how is my financial worthiness tested? It's like, do I have to have the money in advance? How do they know that I'm actually going to be able to put up this?
So this is done through an industry called the clearing industry. At least for professional traders, you have your backing is basically done by a clearing firm. So that's one of the big ones, like Merrill Lynch, Bank of America. Goldman Sachs is another big clearer. And then all of the clearers are members of the OCC, which is the Options Clearing Corporation. And they are where the buck stops, basically. Now, I don't think that they've had any direct involvement since 1987. There was a lot of turmoil in the market in a certain time period, and that I think was really the last time that they've actually had to guarantee some of these things. But So if you're a professional trader, you have some amount of margin that's put up. If you are a retail investor, then the firm that you're dealing with has those same sort of margin requirements, but they might give you slightly more strict ones just as a retail investor. So buying options is sort of easy because you can't lose more than the amount you've purchased the option with. So if you have that amount of money in there, then you're fine. Selling options is a lot trickier, and a lot of firms will not let you do that, certainly not in a unhedged fashion. Anytime you sell something that can go to infinity, there's a little bit of trickiness involved.
All right. What is a market maker, and how is that analogous to bookmaking in sports?
So I was a market maker for a number of years, and also a specialist. And I guess there's a kind of a distinction there. Back in the day, all the trading was done in an open outcry environment. If you've ever seen the movie Trading Places or something, I mean, I guess you can kind of get an idea. There are still some crowds in existence today. Probably the most notable one is the S&P 500 crowd that the SPX trades in Chicago. There's probably a crowd of 200 people or so, and there's all the typical yelling and screaming and that sort of thing that goes on. Most everything else is done primarily electronically now, but when I started in '94, it was certainly done as open outcry trading. So you had basically a specialist that was in charge of moving all the markets around. You had for each stock, there may be, back then maybe about 50 different option series that you could trade on that. And the specialist was in charge of sort of maintaining a fair and orderly market. And the crowd of market makers, you could basically trade whatever you wanted, provided you had a seat on the exchange. And they would make two-sided markets on those options. So if there were not liquid markets, you as a market maker had to provide both a bid and an offer. So you had to say where you would buy the option and where you would sell the option. Brokers would come in with orders that they were representing clients, retail investors, institutional investors, things like that. They would bring an order into the crowd and then ask what the market was. Market makers would respond with their markets, and then the broker could choose to trade with that. Normally, he would have limit or market orders to execute with the crowd. Now, this to me is very, very similar to bookmaking at sports. In fact, there are some sports markets, I guess, that are sort of done like markets, especially online. You can find things that where you can both buy and sell a team. For instance, if you are trading futures on an event like the Super Bowl or something like that, I think Trade Sports and InTrade, and there's a few others. I'm not sure if they're all functioning now. I don't do any sports betting myself. But basically, the market maker is making a spread. So you find a place where you have some idea of what you think fair value would be. If you think an option's worth $1.20, you might want to bid $1 for it. You might want to offer it at $1.40. And either way, you're making 20 cents of edge.
If somebody takes the other side.
I'm sorry, go ahead, Bob.
I was saying if somebody takes the other side.
Yes.
Yeah. So are the edges similar? Like in sports, you lay 11 to 10, right? So the bookmaker has a little under 5%, right? What kind of edge does the market maker have?
Well, when I was kind of growing up in the markets, I guess most of the things that I would trade were between a quarter and a half wide on a, say a $2 or $3 option or something, which actually is pretty wide. That's a fair bit of edge. These days, many stocks, the options on them trade in pennies. We had the benefit of using fractions before. They went down to 16ths for options. And then at some point, they converted them to pennies. And of course, making the minimum tick size go from 6 1/4 cents down to 1 cent, that has the side effect of actually making much tighter markets. So these days, if you trade something liquid like Apple or something even very high price stocks, the options are actually very tight and then maybe a penny or two wide in a lot of cases.
So a $50 stock, you could buy once. You could buy it for $50.02 and sell it for $49.98 or something like that.
Something like that, yeah. That's That's actually pretty tight. I think there's a lot that really plays into it. Some options are riskier than others, like options that are very deep in the money act like stock, and so the resultant markets tend to be a little bit wider. Out of the money options that start out pretty cheap have fairly tight markets because there's not a lot of risk in those, unless the stock were to move quite a bit.
All right.
Now, for the average sports bettor who goes and bets football, they basically have no chance. I mean, they're just going to lose their money if they make enough bets. Is this? I mean, as someone who's not on the market, do people? I mean, do they have a chance buying options?
Well, they actually do, and what I was saying, like these days, things have changed quite a bit. I mean, before the markets were proprietary, so if you wanted to trade IBM options, you had to go to the CBOE, which is Chicago. If you wanted to trade Dell Computer, you had to come to Philadelphia. If you wanted to trade Apple, you had to go to the Amex. Nowadays, we used to have 4 options exchanges in the U.S. We now have, I believe, 12 at last count. And everybody lists each other's stuff. And so you actually have 12 different centers making markets, which causes all of the markets to become very tight. It's not very collusive anymore. It's much more competitive. Additionally, you have a side effect, which is that when everything is electronic, you have a lot of firms that have their computer programs trying to look for small opportunities. And that includes the computer programs of other people. So there are a lot of professionals that trade with each other when they're sort of hidden markets cross other hidden markets. You as a customer can basically a lot of times put an option order out mid-market and get filled because there's so many people watching now. Everything's really, well, when I say people, it's more like computers that are running the algorithms that they've been programmed with. But effectively, it means that it's a very competitive market. So even if you're investing kind of randomly, it's going to take you a while to burn through that much spread, I guess. The edge is really
edge is
tiny.
So small,
yes.
You're saying.
Yeah, it's actually a very good time for people to be trading, only because the things that they normally had to pay off to, which were these big spreads, don't really exist so much anymore. I mean, some of the illiquid products still have large spreads, but most of the things.
It wasn't just the spread, but also aren't you just not? It used to be that you just would not get the same price as an outsider that an insider would get.
Yes, and again, the computers kind of had a lot to do with that. If we were very ethical about these things, and in fact, my experience has been that the traders on the floor were very ethical, actually. Even though you had a little bit of play when you saw an order coming in, the brokers represented the customers well, and I think that things really went okay from a customer's standpoint. But these days, since everything is electronic, what you're paying off to is not just the spread, but also the commission, and both of those are actually going to zero. I mean, there's a lot of places that have very cheap commissions. I remember making personal trades in my retirement account, and I was shocked at how much the commission cost. And these days, it's pennies on the dollar of what it used to be. But everybody has the same access, basically. I mean, there's not a lot of advantage to necessarily being a market maker anymore. You're all there, and there's much more of a hybrid situation. A lot more firms are not on the floors anymore. They're in different offices, and everybody's computers are all connected up. In fact, you tend to put all your computers in the same place. There's an area in North Jersey that basically holds computers for all over the country. People just communicate with those, and the New York Stock Exchange, for instance, measures the length of wire they give you to make sure that no one has unfair advantage over anybody else, because it's all down to the speed of light.
Wow. Now, I've heard of several top bridge players, backgammon players, poker, and other gaming experts who've gravitated to options trading. Now, the top players in any of those games tend to have off-the-chart IQs. Does this imply that unless you're really, really bright, you won't do well at option trading?
So, well, I'll tell a little bit of a story here. Excuse me. I started trading for a gentleman who was a world champion bridge player, and that's how I first got into the business. His partner His bridge partner was also a world champion backgammon player and was also an options trader. He traded in San Francisco. My boss traded in Philadelphia. And I remember a few weeks after starting that I was looking for a bridge game, and some people were playing up in the clearing firm. They were playing some cheap money bridge. I think it was a penny a point or something. It wasn't substantial. Like you could, win or lose $20 or something. And I sat down and started playing with them, and I realized looking back on that, people I was playing with had multiple world championships. And it's not just that you're just running into game players. You're running into really, really good game players. We also had a weekly informal poker game. We used to play 5-10 limit, sort of dealer's choice. And probably the people that I played with, the 7 or 8 people, have maybe about $5 million in tournament earnings at this point. It's just, again,
did
kind
you
of
teach
funny.
them much?
Well, no, I certainly wasn't in that kind of league, but yeah, and it's really funny how much crossover there is between that and gambling. And as far as the IQ thing, my boss would always tell me between playing bridge and trading options is way easier than playing bridge. And I think he's right. I mean, there are a few, there's a learning curve, of course. It is a complicated topic. You probably do have to study it for many hours to kind of learn how they work. And then, of course, there's no substitute for experience as far as getting used to how options trade and how they positions evolve and everything like that. But I wouldn't say all the people necessarily had off-the-chart IQs. In fact, I used to joke back in the day, the two people that did well at options were the smart people and the loud people. And there were people who were just very good at getting done what they wanted getting done, even though they didn't quite know exactly what they wanted. But there were enough smart people that could sort of follow along with and then just kind of get it done. So these days, the loud people don't have as much of a place, but computers make
That's why when as I'm getting older and my intelligence is going, I now have a radio show so I can be loud. So so I follow along with that. Good. Gambling's a lot different today than it was, say, 30 years ago. Is it true that options trading is different today?
Yes. So I guess that, as I was saying before, I when I started, it was kind of a. I mean, I have to kind of be careful using words like collusive because that's kind of a tricky word, especially when you're dealing with the SEC. And even though I don't think, again, I think that people actually were quite ethical. There is a lot of implicit sort of collusion going on with people who are all sort of trying to accomplish the same thing, even though you're competing with each other. It really behooves you to try to get the best price for something. So people who would sort of step in and better each other's prices, usually to start some sort of war. I mean, people would get their back up and everything. And I've certainly witnessed quite a few fights down the floor, some of them physical. It really is, it's kind of like a junior high locker room sometimes. But basically, people generally got along with each other, and you sort of know that it's not going to get you anywhere. Just keep bettering prices with the people that are standing next to you because they're going to do the same thing to you. And nowadays, now that everything is behind a computer, as you can see, I'm sure with such things as trying to read YouTube comments or anything like that. As soon as you sort of hide behind any sort of anonymity, seems to bring out the worst in people. And I guess in trading, although it's not necessarily good or bad as such, people really don't have any sort of social barriers as far as improving other people's prices. I mean, some of them are downright aggressive about it. And everybody's hiding behind a computer now. So, and the net effect of this is to make markets much tighter. It does make them, I guess, a little ostensibly less liquid. They're smaller size on the markets. It's hard to get people to commit to certain things because they're sort of jockeying around pennies. But there is certainly, options trading has grown every year, volume-wise. So it's definitely a different environment now.
Well, also the players have gotten way, way smarter. I mean,
Absolutely.
30 years ago, I heard, I had several friends who were trading options, and back then it was just, go in and vacuum up the money.
Oh yeah, yeah. There was definitely a lot of good situations that would occur. Although, one thing that happens with computers is that when computers start to go funny, they can go really funny. And one thing that human beings don't do is sort of like spiral out of control. And we've certainly seen in markets where algorithms have sort of gone unfettered. I mean, there's been some very high profile examples of this recently. I don't think it's necessarily the fault of any algorithm per se. It's just sort of the nature of how the business has gone. I know that they are certainly working in Washington to, try and come up with some decent regulation. I'm not sure that the efforts that they've made so far have really amounted to very much, except a whole lot of headaches for the people who are involved. I don't know how much it's actually protecting the marketplace, but basically everybody is a lot more sophisticated, and but the spreads are tighter. So if you are unsophisticated, you're actually protected a lot by the fact that others are sophisticated. Because the market's, you can't make more than a 2-cent mistake on a market now. It used to be that mistakes were much more costly.
Well, and back then there were market makers that weren't very sophisticated.
Right.
Can you talk about how loss rebates are really like options and how that applies to us as players?
Absolutely. So I have kind of an example of this. I mean, a loss rebate, essentially, we'll keep it simple. I mean, assume it's sort of 100% loss rebate. The idea is that you will take a gamble, and normally what happens is if you win some money. If you lose some money. And the way the rebate works, of course, if you lose, they give that loss back to you. So this has the net effect of being like a call option, because if you have a call option on a stock, if the stock underperforms, you just don't exercise the option. Basically, you're limited to the value that you've invested in the option, and that's it. It can't just keep getting worse. No matter how much the stock goes down, you are only in for a certain amount of money that's tailed off. Yet you still have the upside of good things happening in the stock. So you experience the upside, you don't experience the downside. That's very much like a loss rebate. Now, of course, when you're trading, when you're buying calls, you do have to pay for the calls, whereas loss rebates are generally given to you as a promotion or something like that. But the analogy is kind of the same. And options, one of the main pricing components of options is volatility. The more volatile an underlying security is, the greater the options are worth. And that's generally true of options. And very similarly, with a loss rebate, you want to do things that are very high volatility. The riskier, the better. Just as a kind of a thought example, I guess, if you had a coin flip game where you would win $1 on heads and lose $1 on tails, and you had another roll one die game where if you rolled a 6, you'd get $5, and if you rolled anything other than a 6, you'd lose $1. Both of those are fair games. If you now put that in with a loss rebate, the person flipping the coin basically is going to half the time win nothing because he's going to get his dollar rebated, and half the time win $1. But the guy who's playing on the die is 1 in 6 times going to win $5, and then the other 5 and 6 times going to win nothing because he gets the loss rebated. So he's actually making 5/6 of $1, whereas the coin person's only making half $1. And that's kind of just a basic, off the cuff example of it. But when you have a loss rebate in a casino, a lot of times, playing slot machines is the best way to go, because you can sometimes find very high denomination slot machines where the variance is off the charts, or any sort of video games. Video poker actually is fairly low variance comparatively.
Have you played Ultimate X recently?
Yeah, I have played Ultimate X. Yeah, that's high variance for video poker wise, but I'm sure it pales to a $100 slot machine. But anyway, the best way to play these loss rebates is actually to try to play as much as possible, as quickly as possible. You try to lose money like it's going out of style, and you hope to hit something on the way, and that's really like the optimal way to play that. And again, very similar to options. I have a story about that too. I think I mentioned this actually the last time I was on the show a year ago. That they had a loss rebate promotion in Atlantic City, and I was trading in Philadelphia at the time, and I remember telling people about this, and on the trading floor. And even though a lot of them are not gamblers, they sort of understand options and they realize that this is just a free option. So a whole bunch of Philly traders were going down to Atlantic City, and I think people made something like $80,000 total off the promotion. These are people who are not even used to advantage gambling.
Most of them broke even because they lost whatever the rebate was.
And a few of them
got
hit
it
big
back.
jackpots. Yeah.
Good. If you listen to sports radio, there's a bunch of ads for handicapping services, almost all of whom claim to consistently beat the spread. If this is so, presumably the sports books are all losing money big time. So we take those ads with a big grain of salt. Now, on stock picking, there's a lot of folks offering expert advice there as well. Are these guys any more knowledgeable than these sports handicapping services?
Well, I'm going to tell you how to make a small fortune trading options.
I know that one. I do this in video poker too.
Start with a large fortune.
That's it.
And that's definitely I've heard that joke a lot on the floor. Yeah, mostly with people who are not laughing. But anyway, the idea is in options, in securities, in investing, and everything is very similar in a lot of ways to gambling. And I know from experience that there are just a lot of people with opinions about gambling. And normally they're not very mathematically based. People who are kind of have ideas about, they're sitting there like, meticulously tracking roulette. I don't mean like, 30,000 spins. I mean just like, 10 spins and then try to see what the pattern is or whatever. Or, people who are sort of pseudo counting cards at blackjack, or there's a lot of, blackjack actually is not is dependent trials, but games that normally can't be predicted. People are wired to look for patterns, and when you have something like gambling, where you have a very straight mathematical approach that is proven, you can demonstrate that certain systems are not worth it. The paper they're printed on, and other sorts of things are actually very mathematically based. I mean, if you play video poker optimally, it's because a computer has gone through every possible hand combination, and if you average them all together, it turns out to be over 100%. And that is a solid mathematical fact. So it's very easy in gambling, really, to sort of distinguish between people, just kind of trying to sell a hawk snake oil and people who actually have, something worthwhile. In trading, you don't really have direct math. You have a lot of models, and you have all sorts of, things that sort of approximate it with varying degrees of mathematical, robustness, I guess. But it's very easy to fall into the trap of thinking that you are a genius because you have made money in the stock market. And, it's never confuse genius with a bull market. That's another little saying. So you have a whole lot of charlatans in that industry too. And it's very hard to disprove them because you don't have, you can't just sort of like prove that they're wrong, but obviously you can find correlations with the market and all sorts of things. I mean, I think it was the performance of the market was correlated with the Super Bowl winner very, very accurately for quite a number of years, and obviously that has nothing to do with reality. There's all sorts of astrological things, and but even if you don't go into that obvious craziness, I mean there are all sorts of people touting something, and I'm guessing that they make the money by selling what they're selling and not actually by doing what they're selling.
Yeah, I mean, it's the biggest casino in the world. So
Yes.
if you had a system that worked, you would just print money. You don't need to sell it to anybody.
Oh, yeah. And I've heard my share of these, especially in options. I mean, people have some crazy ideas. Like people just say that you just keep selling options until the cows come home. And then when it starts to go against you, sell more options and basically just keep digging a hole. And of course, that's one of those things that works until it doesn't. You'll win 99 times out of 100. And then the 100th time you're going to blow up. It's like a martingale system or something. There are ways of looking like you are doing well when you're actually have huge, inherent risk.
Many gamblers sometimes go against the odds and go with their gut feelings. On occasion, when it works, they tell everybody about it, such as, I just knew I was going to hit a royal flush that day, so I kept playing and playing, even though it wasn't the best pay schedule. And sure enough, I got it. Sweet. Now, I know I just really knew it beforehand. You never hear the stories on the other side, which have to be much more common, of I knew I was going to hit a royal flush that day, so I kept playing and playing, even though it wasn't the best pay schedule. But I didn't get the royal, and I lost a ton of money. Now, how often would you say do successful options traders go with their gut and go against what their computers are telling them?
Well, since you used the adjective successful options traders, that actually makes a big difference. Excuse me. There are people who I've seen doing, spectacularly strange things in the options markets, and I don't know of anybody who's actually survived that sort of thing. I mean, being a good options trader, especially a good market maker, is it's very much about discipline. It's you really, especially back in the day, you didn't have to do a whole lot of clever things to be handed edge all the time. You could basically just sort of stay down there. It's just that it's just so tempting for people to take risk when they really should just be balancing their positions and just sort of going with the flow. So I don't know that I've seen too many successful options traders do that. I guess, I know one guy, his story is kind of interesting. The way that he had gotten his initial stake on the options floor, he went into a craps game with $800 and emerged with $125,000 and bought a seat on the exchange and started trading and supposedly never looked back. And then, I believe he drives a truck now. But, it's always funny to see what kind of careers people go into after options trading. But, it very much is a discipline thing. And if you are really not inclined to, kind of watching what you're doing, it's is exactly the same thing as gambling. It's very tempting to overbet your bankroll. It's very tempting to, kind of go with your gut. And you just have to not have those feelings, or at least not entertain them, if you are going to be at all serious about winning.
What if somebody wanted to get into it? How would they do it?
Yeah, it's a little tricky. I mean, when I started, it was you really did have to know somebody, especially to get onto the floor. I was fortunate to know somebody in the business who hired me, basically, and if you wanted to get into it, I guess from a retail perspective, it's certainly very easy. I mean, there are a lot of firms out there that provide very cheap options trading. No,
I meant if you wanted to do it as a professional.
Yeah. I know that from time to time, some of the bigger firms will, go out and hire. It seems like what they sort of go for are the math and science nerds, though, that are kind of fresh out of college. They get definitely Wall Street's gotten very technical lately. So there are, I guess, still some barriers to entry. I don't think necessarily, people who go through business school routes and everything have any leg up. I think it's actually better to come from a physics degree or a computer science degree or something like that. If you were, I guess, a little bit later in life trying to get into that, I really don't know. Again, it's usually about knowing somebody. If you are a gambler or a poker player, backgammon player, bridge player, whatever, there's a lot of people that that are probably in this business.
I did have a teammate back 30 years ago who took his blackjack money and went to San Francisco and basically went to a top trader and said, "Look, I'll give you $50,000 to teach me how to do this." And he ended up a centimillionaire, so it worked for him.
Yeah, it really does happen. Again, there are people who are inclined to that. I mean, I know multiple people who have retired, certainly with more money than they could ever spend in a lifetime, and it's that was a very common arrangement back in the day, that people would pay for somebody to take them under their wing and go. I guess I know a couple weeks ago when you had John and Tommy on, you were talking about bankroll sharing arrangements and things like that. Typical trading, I mean, there were many sorts of deals, I guess, but some of them might involve, half the money going to the trader, 20% to management, 30% to equity or something like that. And people would, kind of learn under that, by sharing some of their 50% split with someone who's training them or teaching them. A lot of people would come with their own money. There are still outfits out there that accommodate that sort of person. The levels are much higher now. Clearing firms don't really want to talk to you without at least $1 million, and even then it's very tough. I don't even know if that's even close anymore.
I assume if somebody came up with $100,000 and wanted you to share your information, you might be able to reach an agreement?
Yeah, we might be able to reach an agreement.
All right, doesn't seem all right. So we're going to take a break now, talk about some of our sponsors, and we got some more questions for Brian shortly. I found that quite interesting. I know more about options now than I did a few minutes ago. The South Point has more than 10,000 games returning more than 99%. That's more than anybody else. Between now and December 30th, you get 50% off of most everything while using your points, including restaurants, liquor store, showrooms, spa, movies, etc. They've done this the past several years in December, which is a good reason not to cash out all your points earlier. The 50% off is even good for New Year's Eve party. Bonnie and I are going to be attending the Tony Orlando concert there. But the main attraction of that particular event is the excellent piano player Wes Winters and a big dance floor which will precede the concert. There will be Double Point Day on January 1st, midnight to midnight, which has an interesting factor that most of their Double Point days do not. The casino day is from 3 a.m. to 3 a.m. So the first 3 hours of double points are technically in December, and then the last 21 hours are in January. Now, this could be relevant with respect to whether you've already had a big win or a big loss in December. Nobody knows the exact formula for how they do their mailers, but if you have a big loss in a month, your mailers tend to be a lot bigger than if you haven't. So if you played Christmas Day and did exceptionally poorly, it might be a good idea to make sure you start after 3 a.m. And of course, if you did exceptionally well, you may want to do it before from midnight to 3 a.m. to buffer that and not hurt your mailers too much. Next semester of free video poker classes will begin Wednesday, February 5th. We'll continue for 10 weeks. I'll give you the exact schedule later. At the Palms, the $62,000 Greedy Grinch drawing consists of 5 winners each Friday and Saturday night at 8 p.m., who each will grab a 1 in 10 money bags with a top prize on the board of $4,000. Points are earned by playing machines since the preceding Saturday at 8 p.m. On Friday and Saturday evenings, you receive 5-time drawing tickets. Videopoker.com remains the best place to play a wide variety of games, including Quick Quads, Ultimate X, Extra, Frenzy, Poker, Hyper Bonus, and lots of others. Often these games are the best returning games in a casino, and you need to practice to make sure you know how to play. The free monthly contest, which goes now until New Year's Eve, is Hyper Bonus Poker. If you play in this contest, make sure you play triple-double bonus. And that yields 4,000 coins for aces with a kicker in addition to the royals. Now, the pay schedule for the game is only 9.5, which is much tighter than you should be playing in a casino. These 100-hand contests depend mainly on big hands being dealt to you. And then you hope you get big multipliers when that happens. Each day between now and the end of the year that you enter at least 12 100-hand tournament sessions, your name goes into a January 1st drawing for an iPad mini with a Retina display. Our guest next week is blackjack player Ken Smith. Among other things, Ken has recently published some high-low strategy cards and some ebooks, which we'll be talking about next week. I see in an email that I got the ebooks today. I have not looked at them yet, but I will in the next week. Do you know Ken pretty well, Richard?
Yeah. Ken's a great guy, and his ebooks are on blackjack tournaments. And when I was playing back when UBT was going on, and so I was playing some blackjack tournaments at that time. really he was by most people considered to be the best tournament player out there. So we're also going to be talking about tournaments next week and what opportunities are still there. And I have not read his book, so I'm actually happy he sent them to us, so I can. I'm eager to read those.
Now, Stanford Wong wrote Casino Tournament Strategy, and we had an interview with him in the archives. And presumably, your opinion of Ken Smith's books would be more.
Well, I haven't read them yet, but I expect them to be better than Wong's book.
Very good. All right. So we're still talking to Brian McAllister, Option Traders. Now, assuming you don't have inside information and you don't have a really good crystal ball, where does the edge in options trading come from?
So, traditionally market making, the edge was in the bid-ask spread. So you could, buy something for $1 and sell it at $1.20 and just do that all day. And that was really how you would do that. And of course, options are interrelated. They're all very correlated with each other, and there's some definite mathematical relationships between options. So if you were buying some certain types of options and selling certain other types of options, you could basically reduce your risk through various means, and just sort of realize your edge with as little risk as possible. Now,
so arbitrage.
Yeah. So that's kind of known as volatility arbitrage, and that sort of thing, certainly still goes on. Really, what options are still a zero-sum game. So anytime that you have made a trade with someone and you make money, they lose it, and vice versa. So it is possible, though, for both people to be sort of happy with the transaction. It's very similar to the insurance industry. Somebody who wants to insure a particular event pays a premium for that. They're basically giving up some expected value. The other side of it is taking the expected value and basically providing a lump sum in case of a certain event. So, one person makes a little bit of money and the other person gets to sleep at night and everybody's happy. So this happens all the time in options. And, really you just have a whole lot of people selling lots of different little sorts of insurance policies. We have, these days there are some specific types of situations that occur when stocks are very hard to borrow, or there's a lot of little still reasons to be a market maker. I guess an advantage sort of from the system. I work now for a technology company called Actant. We make trading software for professional floor traders, and our system does a lot of algorithms and things like that. So you can really, if you have enough speed, and again, if your computers are close enough to the main center, you can actually get a speed advantage on other people. Used to not really be the case with Open Outcry, but certainly in these days, microseconds are counting.
But now, if you wrote that software, wouldn't you have an edge over the people using it?
Yes, in fact, I'm always very tempted to get back into trading. I very much enjoy what I do, but I certainly see the potential in a lot of the software that we provide, and I think that if you were smart with it, you could actually take an edge over, over the grand scheme of things.
We have about 30 seconds left. Insider trading is frowned upon. Is that worse in option markets or compared to the stock market, or about the same?
Oh, it definitely is worse in options markets because options are so leveraged that if you have a bit of inside information, you can really do a lot of damage with fairly small trades. That's always a big thing.
All right. Thank you, Brian McAllister. Everybody go out and hit lots of royal flushes tonight. Good night, everybody.
Good night.
You've been listening to Gambling with an Edge with your hosts Bob Dancer and Richard Munchkin. Subscribe to the show in iTunes, and episodes will be delivered to you automatically every week. Archived versions of past shows may be found at bobdancer.com and richardmunchkin.com. We welcome emails at gamblingwithanedge@gmail.com. Bob Dancer and Richard Munchkin are both available on Facebook and welcome your questions. The sponsors for the show are the South Point Hotel, Casino and Spa, the M Resort, the Palms Casino Resort and the website videopoker.com. Join us again next week for another Gambling with an Edge.